What is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be talking about Uber stock, and we're going to see, is this a good time to buy the stock or is it a good time to sell the stock? This stock is up 70% on the year. Earlier this year in February, the company announced they are doing a $7 billion share repurchase program. So that definitely helped out the stock. And since then, the stock has been doing great. But we are going to see, is the stock at too rich of a valuation right now, or is this company's growth justified? So the market cap on this company is $154 billion. Okay, that's something to keep in mind. The other things to think about here is that their ride sharing business makes up 50% of their revenue. The delivery business makes up 32%, and the freight business makes up roughly 14%. And then keep in mind too that Uber has a 76% market share, right? They are the dominant player in this industry. And this is not a small industry. This is a ginormous industry. So that's the good thing. Those are the pros, their market share and the industry they're in. I wouldn't say it's a good industry to be in as far as profitability goes, but as far as a customer base and necessity of the service, it's a great industry to be in. The other good thing we see here is that there is a huge improvement in the bottom line. Just a couple years ago, this company was losing billions and billions of dollars. And now in the last 12 months, this company has done over $4 billion of net profit. So that's the good thing. However, keep in mind that is not a consistent number, right? They just did this just in this last 12 months. So we have yet to see how the next year or two is going to go. So keep that in mind. This is over $150 billion company now. So the cons though to this stock or this business is that first off, we have incoming technological competition from primarily Tesla, because once Tesla has their robotaxi business out there, they're going to be able to charge a lot less, and that is probably going to take a lot of market share from Uber. So one of my biggest concerns would be if they have 76% market share in the ride sharing business and they still can barely make a profit, what is that going to look like when we have Tesla and the robotaxi business in there? Now, sure, maybe years down the road, hopefully Uber is working on some sort of self-driving vehicle to implement into their business, because then that would help out their margins. But we haven't really seen that yet, and they probably are years behind where Tesla is right now. So that's a big problem. The other problem, how I said, is lack of consistency, right? There's no consistency in their business, and it's very hard to put a fair valuation on a company when 2 years ago they were losing $9 billion, and then this year they made $4 billion, right? Who's to say they don't break even on the next year, right? So it's very hard to tell, is this company really worth $150 billion? In my opinion, no. In my opinion, I would value it more like 80 billion or 100 billion, something like that. Because, even though they have 76% market share and they're in this great industry, they're not making enough money and their profit margins are really bad. Then that gets us into the valuation. For the last 2 years or so, this company has been trading at pretty much around, and then the richest it's been is 120. The good thing is that analysts have them pretty much doubling their EPS for next year. It's expected to go from $1 EPS this year to over $2 next year, which would mean that that would cut the PE ratio in half, which that's good. But still, if we're talking it's trading at 80 times earnings this year, and then 2020, let's say a year from now, it's trading at 40 times earnings, that's still pretty rich. 40 times earnings for a company, you're paying 40 times next year's earnings for a company that's barely growing 15 to 20%. That's my other problem. Then we have Uber Freight has been losing money 2 years in a row. That's not the end of the world, because remember, it's only 14% of their business. So not a huge deal there, but it still is definitely not helping their bottom line. So I think if they can, since they're in all these spaces, so food delivery, they have DoorDash makes up most of the market share for that business. The Uber Freight business, since they have all these business models that require transportation and vehicles, they really need to figure out how to improve their margins on that, and that's probably going to be implementing some automation and some self-driving vehicles, right? That's what they need to do. So if that happens, then I think that would push up their margins a lot, and that would keep them relevant when they're competing with other businesses like Tesla or like Waymo or like even Lyft, anything like that. So that's my thoughts on this. I would say this stock does not need to be $150 billion. I think if they were executing like crazy and they are, let's say they are growing at 20%, but their margins are actually strong and they're putting up consistently over, consistently 3 billion, $6 billion, something like that, and they were doing it consistently, that'd be a different story. But I mean, for what they're doing right now, we really need to see how the next 6 months goes and see, are margins improving and are they showing a consistency in their business? That's what I'm going to be looking for. So I'm definitely not buying this stock. It would have to dip down quite a lot for me to be interested, but those are my thoughts on Uber stock.